Thank you very much for downloading this recording once more. I would like to focus on partnership. I think partnership questions are prevalent also in your exams, excuse me, under financial accounting. So as per our tradition, we go to the requirement. This is CS Zambia 2018 June paper, question 6, the last question. Um, I might have to do the question 2, which involves clubs. Of course, that's not supposed to be very difficult, but let's try to see if we can bring down this question. The requirement says we should prepare a partnership statement of profit or loss and appropriation account for the year ended 31st December 2017. We should also prepare a partnership statement of financial position as at 31st December 2017, 10 marks, 10 marks, and of course, the total is 20 marks. Faced with a question like this, I think it'd be very important for us to read a little bit from the top there. It says, Chiseche and Chikondi were both lecturers at a reputable institution in Kitwe, but they decided to break away on agreement that they would form their own tuition center and operate it as a partnership business. Now, prior to commencement, they drew up a partnership agreement in which the following were agreed upon. We have got capital contribution. Chiseche contributed about 150 and Chikondi 225,000. We have got interest on capital. It was agreed. Interest on capital will be given to partners, 5%. Interest on drawings. Interest on drawings will be paid by partners at 6%. Profit and loss sharing ratio is 40 to 60% of the residue earnings. Chikondi would be entitled to a salary from inception of the trading of this business, and of course 55,000 will be given to the partner. So besides implementing the above 5 items, Chiseche and Chikondi had the following balances at the end of their first year of trading, ending 31st December 2017. So you've got a list of items there, and of course we'll be getting to those as we go through the work. Allow me to just discuss briefly the notes. Rent and insurance balance above includes a 3 months insurance invoice paid 28th February 2018 of about 600. That means that we have got a 2 months prepayment because our year is ending on 31st December 2017. All right, so 2 over 3 times 600, of course, that gives us 400. And rent covering a 3 months period to 31st January 2018. Of course, we've got a 1 month prepayment. You can say 1 over 3 by 2250 to find that prepayment. Okay, now prepayments reduce expenses and of course increase our current assets. 2 says furniture and fittings are to be depreciated at 15% per annum straight line. And of course we need to know how to deal with our straight line method of depreciation. Receivable allowance for 4-5 is required at 31st December 2017. Allowance in the first year of trading is to be treated as an expense. Inventory of books at 31st December 2017 was 4-5. Of course, that is our closing inventory. We don't have opening inventory because the business is just starting, or this is our first year of trading. All drawings were taken on 1st July 2017, meaning that we're supposed to prorate. Remember that we are reporting to the year ended 31st December, so we are dealing with 6 months drawings. All right, so that's what we have there, and so we need to start already populating our statements. Now, of course, there are those who feel that partnership business might be a difficult task to account for. I say that's not correct. All you need to appreciate are the steps that are involved. I think there are about 4 steps. So the first step is you need to prepare your statement of profit or loss, as you can see there, okay, to determine profits earned by the business. And you need to come up with your appropriation account. This is used to allot profits to the partners. You need to come up with your current account. This is used to post short-term earnings and withdrawals from the business by the partners. And then finally, you've got the statement of financial position that shows partnership business position, the resources and the liability thereof. So again, the key is to remember that the business is not owned by one person. The business is owned by more than one person. Hence, we have got these two accounts to help us to correctly account for the benefits and the obligation that comes with the business. So when you look at your list again, you need to include in the list your sales, which are these. I hope that you can see that. And of course, there were some refunds, student refund claims that will be treated as returns inward. So let's begin to populate our account to see whether we can reach in sales 1652 250, and then you less the claims which are 24. Okay, so you do that. Okay, let me just try to format this so that it looks like we're dealing with accounting work. Just a little bit there. I have none there. Let's try to see what happens. Okay, so that looks better. Okay, so let's progress. Net sales will be the difference, of course. Our net sales will be the difference. We have figure there. I've got that figure there. Opening inventory, got 875, 490. Purchases. Do we have? Oh, we don't have opening inventory, by the way, so we put a new there. And then purchases. What do we have? Let me just put some figure there. Let me just put some figure there. What we have, we've got about 875, 490. All right. Then we've got less. Returns. Like to check that one again. Was supposed to be all right. So returns of books, textbook supplies. We've got 990 there. So let's take that one. So 990. Okay, so it's supposed to be a minus 990. All right. What else do we have? We have got what we call our net purchases. So we have got that figure there. Then we less closing inventory. We should have been in the note, of course. It's given there. Hope that you can see that figure. So minus 45 gives us what we call cost of sales. Okay, let's do that. Our cost of sales is 870, so I can underline that and also underline that. Yes, we need to make our cost of sales a minus so that we can less that from our sales, net sales. That gives us that figure. That looks nice. All right, so now we go to our expenses. We deal with rent and insurance. So for rent and insurance, from the list we have got the following figure. Then we're supposed to less the following amounts. Remember, 600 by 2 months prepayment. Then minus again. I remember if you go to that part 2250, but that was 1 month prepayment. So 2250 by 1 divided by 3, right? So what do we have for rent? It's supposed to give us, supposed to have an equal sign there. Okay, so I'm getting a 13,850, which is correct. Depreciation is not going to be very difficult. We have got of course furniture at 186,000 multiplied by a 15%, which gives us a 27,900. All right, what else do we have? Allowance for receivables, it was given directly there. I don't have to do much there. It's 4.5, so we put it just the way it is. Say minus 4.5. It's an increase because the first year. Okay, so after having done those adjustments, in fact, we're supposed to write 4.5 just the way it is. We'll less later. We now deal with all the items that have not been subject to adjustment. Salaries 432, staff salaries, call that 432,900. What else do we have? Electricity. I've got a 58.5. Okay, what else do I have? Bad debts, recoverable debts expense. We have got if we go to the list, you can always check that one out. It's showing 34.50. I think that's the figure there, 34.50. So I write it there. Yes, I suppose those are the only expenses that we had. So let's sum up, see whether we can come up with our total expenses. 541, 100. Okay, of course I'm going to ensure that that figure is a minus so that I can find my net profit, the net profit that should be shared between the partners. So net profit is simply the difference between net profit is simply the difference between your total expenses and your gross profit, which is that one. So we have got a 238,750 that should be shared between the partners. Of course, I take it just the way it is, and I'm going down there. Notice that I've done most of the work here so that we don't take too much time. So for our interest on drawings, we add those as per our tradition. Again, when you consider your list, interest on drawings will be based on the figures for drawings, and of course the percentage that has been given. Interest on drawings is 6%. Okay, so let's do that. Now we notice that that took place. Interest on drawings took place halfway through the year. So you say 0.6%, 0.06, which is 6%, multiplied by 1,000. Then multiply this by half. You see half is 6 over 12. I've gotten that figure. It is 1530. What else do we have? Again, you do likewise. You say 60,000, multiply by half again. I've got that figure, so should sum up. How much do I have? See, we add back that because the current account is to be debited. Okay, we now go to less interest on capital. So for capital again, we don't have these challenges. 5% of 150,000. I've got a 75. Hope I'm right. Yes, that's correct. Then I've got 5% again of 250,000. I've got that figure. Now I get my sum, and I push where it belongs. Okay, now I have to make sure that that's a less, because accordingly we're supposed to credit the other account. All right, there's one partner who is entitled to his salary according to our note here, 55,000. It seems as if Chikondi is an active partner, so we have to again debit that account. All right, so now the next thing is establish what we call residue profit by summing up all these items on the far right. I've got 168,330. all right, after I've done that, I have now to share that this profit between the partners according to their profit sharing ratio. I think that one gets that in the second partner, since he contributed more, he gets about 60%. All right, that's what you have there. Okay, so when you sum up, you need to ensure that whatever sum you have is equal to K, and then we can always minus of that, so that when we sum up, finally we have got a new. All right, when we say minus, we have got a new. So that's what we have there. And thank you very much for your attention. Very soon we are going to current account. So after current account, then we go to financial position and we'll be done. So your current account is simply an account that shows short-term earnings and withdrawals of partners. If you have a trial balance and the current account brought forward for a partner is on the debit side, that means they opened with a loss. If the current account is on the credit side, the current account figures on the credit side, it means that they opened with a profit. But since this is the new business, I just did this for illustration purposes. We do not have a loss or a profit because there was no opening balance as far as current account is concerned. So let me begin to populate my items on the debit side of this particular account. I'll start with drawings, and of course we have got those figures here, 51 and 60. So I've got my figures here, 51,000, then there's also 60,000. We have that. Then we have to go and get our interest on drawings, which is 1530 and 1/8. I hope that you can see that. 1530 for the first partner and 1/8 for the second partner. All right, I have to now go and get my interest on capital, and I hope you're seeing what I'm doing. Interest on capital was debited here, so it's to be credited on the other side. So we've got 75 and 11,250. So I put that 75 and 11,250. Okay, salary only for Chikondi, I should presume. Yes, 55,000. So of course that's to our credit, to the credit of the partner. And then we now get finally these amounts: 67,332 for the first partner. These are residue profits. Allow me to just pick them up the way they are. I do also the other one. All right, pick that one up just the way it is. Okay, so I expect my credit side to be bigger this time, just by what we call prima facie assessment. I think that we can all agree that the credit side is bigger. Okay, so we can replicate these figures on this some challenging aspect there. Let me just include that one, 67,332, just the way it is. Okay, what's happening here? This column might have been formatted. Let me just delete it. Okay, so let me just try to do that one again. So what do we have? Summation. Okay, got that figure. I've got that figure. Then I say Okay, so 7,832. Then again 167, 248. That's what I have there. Now I need to find the difference between these amounts so that I can have my figure for the financial position. Again, I do the same here. This one will be equal to that minus that minus that. So that's what I have there, 105448. Okay, so these figures are very important because these figures are the ones to be used in the statement of financial position. So we're almost done. We're now remaining with the statement of financial position, and now we go to our statement of financial position. Of course, non-current assets, we have got furniture and fittings. If I remember very well, I'll just do it within there. Very important again to show your workings. Let me just demonstrate for you. Our furniture and fittings cost of 186 rather thousand, and we had the depreciation of about 27,900 according to what we did there. So we less that. I don't know if you still remember that. And when we look at our profit or loss, the depreciation that was found was this much. Okay, so when I go back there, I have to conclude my work. Say 186,000 minus 27,800. That's the figure that we have. Inventory of books, almost done. It's a 45. Then we have got trade receivables from the list. Make sure that you pay attention. We have got 412, 500 from the list minus 45. We have got that figure. Then we have got prepayments. So what I remember was we had a prepayment of 400 by 2 over 3 plus a 2250 by 1 over 3. Okay, when I do the maths, I'm finding a different figure here. So I'd like to review my balance. Okay, so allow me, if you can, to just do that quickly. We're supposed to make sure that we have got same figure. So let me get back to the question, try to see what could have happened there before we close. So we have got 2250, 1 month 1 month prepayment, and then we have got inside the 600 the 2 months prepayment. That one I'm very sure. Okay, so let me just try to check this 2250. I just work it out somewhere and see what I'm getting. Say 2250. Let me just try see 2250 by 1 divided by 3. Okay, that's what I was looking for. Okay, so let's just work it out simply by saying 2 months over 3 months by 600. For the first figure, we're getting a 400, and then I'm just from working out 2250 by 1 over 3, we're getting a 750. And so what we have there is a 1150, and then we have got money at the bank, right? Bank balance is showing only 12. So when I sum up, what am I getting? So let me just sum up these. I'm getting that figure. All right, maybe I can drop it for the sake of order. Okay, so can we please do the summation of assets? I've got my total assets standing at 572,950, as well as Now I'm ready to go to the capital and liabilities. I'm almost done. Let us get the capital. Chiseche contributed only 150,000. Then Chikondi contributed 500. So the total capital for this partnership business is that much. Then when you look at your current accounts, we had 302 for Chiseche and 105,448 for the other partner rather. So I hope that you still remember this figure. I talked about that. All right. So let me sum up again. Okay, got those figures. Yes, so almost done here. Then we have got payables. That's the last item. No loan. 7,200. Okay, so let us sum up. See whether we are balancing. Okay, so there we go. Yes, we are balancing. Everything is just fine. So yeah, for that figure is equal to that figure. Okay, hope that you can see those figures there. Thank you very much for listening. I hope that you will be able to do your partnership account in the forthcoming exams, and I wish you all the best.